We're bringing Salman Bajwa. He's the CEO of Emirates NBD Asset Management. Welcome back to the program, Salman. Again, we've had a decent number of companies bring out their financial statements. Your initial reaction, perhaps, because the feedback we've been getting so far is that it's actually encouraging, agree or disagree?
Absolutely. So if you look particularly within Saudi, the two sectors which have been the standout sectors have been the banking side and the petrochemicals. Banks, it's not so much on fundamental loan growth or anything like that, but with the rising interest rate environment, obviously you're getting the benefit of the higher margins. You're seeing that across the UAE as well. So even in the lackluster markets that we're seeing in DFM and the ADX, you've got the likes of Emirates NBD, you've got FAB posting excellent results. Within Saudi, obviously the banking stocks have done well. Now, when you get to the petrochemicals, as Felipe just said, you've got the sector which has just reported quarter-on-quarter earnings up 28%. You've got the likes of SABIC, which is up 27%. Another stock we like, Cayenne, is up 72% this year. Now, that is a combination of both earnings as well as the MSCI upgrade uplift. The one sector, however, which is really struggling is consumer discretionary. And we kind of expected that as well, given everything else that's going on in Saudi.
The story around some of the large caps, is it as straightforward as looking at those blue chips like SABIC, for example, and tying it back to the recovering oil price and the petrochemical story? Or would you say there's some inclusions? What are some of the winners on your list?
So Cayenne is one of the biggest ones at 72% for the year. So look, it's one is obviously you can't escape the fact that the oil price has helped, but that only takes you so far. And particularly when we look at the year-on-year earnings growth, that explains that to a large degree. But when you're looking at quarter-on-quarter, that's coming mainly from volumes. And even in the likes of SABICs, what you saw within SABIC clearly was they've got about 1 billion Saudi Riyal of savings that they have implemented. So no, it's not just the story about the rising oil price, but you're 100% right that as we look forward now, I would expect the earnings growth to be a lot more muted or a lot more sort of lower, but that would still keep us, we would still maintain our overweight position in petrochemicals.
We also had some numbers out from Emaar Malls, from DR, and probably giving some context to an earnings season that some are actually quite anxious about, to say the least, because of a lack of economic momentum in the UAE economy in the last few quarters. Again, we're looking here at some of the best performing large and mid caps in the UAE. I mean, I'm looking here at First Abu Dhabi Bank, at DP World, and Emirates Integrated Telecommunications and Dubai Investments, best performers over the last 3 months. Are those the names that you would say, yeah, those are names to watch out for? Is it more of a selective company by company game, or is it more of a sector game here?
See, when you come down to the UAE has really been lacking a catalyst. From a valuations point of view, it's one of the most attractive plays right now. I mean, you've got UAE banks trading between 6 to 9 times earnings. You know, that's a screaming buy at any time. Now, in terms of earnings itself, banks have been coming out with strong numbers. Where we've struggled, and you know the local exchanges are very heavy on real estate, that's the sector which is weighed down. So if you look at Emaar, it's over 20% down for the year. With the numbers coming out for Emaar Malls, as Felipe said, we're looking for something, a catalyst to get that going. We obviously had Emaar come out and talk about sort of potentially laying or sort of offloading some of their non-core assets on the medical and school side. Now that would free up capital for them to focus on the core business.
I was speaking to one of the guys from one of the heavyweight institutional investors in Saudi and in the UAE, and they were pointing to the price to earnings ratio for some of these companies. And we've put together a chart. GTV Go, our clients can pull this up. This is a classic, really, because it shows you what's been happening with the Dubai index, and you compare that to the Tadawul on a 12-month forward PE basis and to the MSCI Emerging Market Index. The story it tells is that the Tadawul at close to 15 is the most expensive out of this, and Dubai is almost half of that at around 8. How do you reconcile that? Something is off.
So there, on the face of it, if we take both in turn, Saudi start looking expensive on the EM side. But then don't forget, Saudi's got this issue of the MSCI as well, and the massive inflow of foreign funds, and at the same time the market's opening up to foreigners for the first time. So you would expect it to overshoot a little bit. It's the same story that we saw in Dubai. It's the same story that we saw in Qatar when they opened up post the MSCI inclusion. So the Saudi thing doesn't worry me as much. In fact, I would think Saudi gets a lot more expensive before the June implementation date. We may get some sort of profit taking post the event. Dubai, on the other hand, completely agree with you, is starting to look very, very cheap. The concerns around Dubai, though, have been where is that economic catalyst coming from? And I do think Dubai is due for a bit of a rally. I think we were discussing this earlier with Felipe as well. If you look at Emar stock had fallen all the way down to just under 5. Now it's rallied nicely up from there to about 525, 530 kind of levels, but it is still down big time for the year. So yeah, you could definitely see a rotation play out of Saudi into UAE as well.
We'll see how it all plays out. You're still sticking around. We still have a few key views to get through. Salman Bajwa is staying on the program. Let's get you a preview, actually, of what is coming up next. We look at what the latest data from Saudi Arabia shows us about the kingdom's lending and spending trends. This is Bloomberg. Data overnight from Saudi Arabia showed lending by commercial banks to the private sector continued to stabilize in June, growing 0.6% year on year. Net foreign assets, another key metric held by the Saudi Central Bank, expanded marginally and now stands at just under $500 billion. And looking at the health of Saudi consumer spending, at least according to one data point of sales transactions increased by 32% year on year, while total sales growth moderated. Let's get back to Salman Bajwa. He's the CEO of Emirates NBD Asset Management. He's still with us. I mean, those are the kinds of numbers that investors are going to be looking through very, very carefully. You read on this batch of numbers. Is it too early to say that Saudi consumers are feeling more comfortable?
Yeah, look, Saudi consumer discretionary is one of the most interesting sectors right now, because on the face of it, when you compare year-on-year numbers, you have to remember you're coming off a very low base, right? So a year ago was probably where the fear factor was at its highest. You're definitely seeing the macro picture improving, so you would expect to see some improvement. But at the same time, you've got to take it with a pinch of salt there, or with a word of caution, really, because what you're still seeing is for the 5 consecutive quarters, we've seen expat population going down. So the Saudization process is still continuing in full flow. Workforce is shrinking, expats are leaving. So, and as we know, and we've seen that in Dubai before as well, over the summer months, that kind of reaches its peak post the school year-end closing. So I think we would see probably one more quarter at least of this before we can have any other way. But yes, what you are seeing is some degree of stabilization. Bank lending, even though it's not really growing, it's at least not shrinking.
Which was the case just a few months ago. So the fact that there is some growth and it's sustained growth is a glimmer of hope.
Exactly. Yeah. So that's what you see on the micro side. Now, on the macro picture as well, as you showed the foreign asset ownership from a Saudi government point of view, obviously now that you're not facing the prospects of those massive budget deficits, you can start to sort of, as opposed to sort of investing or sort of plugging the hole, you can look towards the future. Even the other story that we've got in terms of PIF potentially realizing $70 billion by passing its share in SABIC to Aramco, that would then give the government or the sovereign wealth fund bigger firepower to play with. So yes, on the discretionary side, consumer discretionary, we're definitely seeing interesting trends coming through, and that's reflected also in the stock market as well. You look at a stock like Al Marai, it's flat for the year. You look at something else like Jarir Marketing. Jarir Marketing is a very interesting stock. What has happened is, as Saudization has kicked in, what you're seeing is a lot of the retail players are pushed out of the market because they cannot get sort of the right ratio of the workforce. So a stock like Jarir or a company like Jarir has managed to actually increase its market share, and the stock is up 23% for the year.
Salman, appreciate your time. Thank you for stopping by. That's Salman Bajwa. He's the CEO of Emirates NBD Asset Management with some key calls there on the Saudi economy. Let's get you a preview of what's coming up. Questions remain about Abraj's spectacular demise. Was it all a house of cards? We'll go behind the collapse next. This is Bloomberg.